answer is very simple and straightforward. It's the financing cost. Okay, so have the lower financial cost, the borrower will assess whether we will raise the fund onshore or offshore. Okay, and then the point is we can think that now the China market, the bank are hungry for assets, and they can the liquidity is very sufficient in the market, so the Chinese bank can provide very lower pricing and a big amount of facilities to the borrower. So they're willing to provide the bilaterals, multi-bilaterals, and club deals to close the transaction with a very huge amount for the borrower. Okay, and then the borrower is still need to concern about whether the use of proceeds. Okay, and then whether they will comply with the regulatory requirement, and also the financing costs. So in fact, what we have faced deal with the other our clients, they will consider whether they want to keep the existing credit facility offshore to prepay their offshore loans or bonds, or whether they will lend the money from onshore in renminbi to repay the offshore loans and bonds in US. So because we found there is the gap between the yield from onshore and offshore, the banks, especially for the onshore banks, they will find that there's an increasing participation in the syndicated loan market offshore. So we found that if the banks find that the pricing or the yield is higher than they can get from the onshore loans market, they will need to participate offshore. So you can see that there's numbers of banks willing to lend the money offshore. And then in other way, in the other scenarios, most of the Chinese bank is now eager to enter to the other markets like Middle East, Southeast Asia. You can find that recently there's close a number of the Middle East borrower transaction, and like SEC, ADQ, something like that. The volume itself is more than 1 billion in US. It's a very huge amount, and then the Chinese bank can support more than half of the commitment for each transaction. So you will see that there's an increasing percentage of the loan portfolio from the Chinese bank to the others non-PLC backed borrowers. So I think in the next few years, they still have this kind of situations that the onshore Chinese bank is really, really eager to acquire more assets outside China.